Hello, Matt Bannon here, Granite Point Tax Group, talking about the Alternative Minimum Tax, or AMT. Back in the 50s or 60s, there were some high rollers, high incomers running around, and they had structured their lives in such a way that they had a lot of deductions, didn't pay a lot of tax, and unfortunately it started to, word got out. Congress decided that's no good. But rather than rewrite the entire tax code, which would be a huge burden, they instead came up with this new set of rules that said if your income is at a certain level, then we're going to start denying some of the deductions you would otherwise be able to take. Now, the problem with that is that they never indexed that income level for inflation. So over 30 or 40 years, what was once a very high income level is now not so high, and it's catching a lot of people. They do generally kind of patch it every year and index it for inflation kind of 1 year at a time, but still it's catching more and more people, and if they ever fail to index it, it's going to catch almost everyone. So some of the items that we're talking about here, and especially here in Oregon, where we have a fairly high income tax and property taxes, under the AMT rules, you are not allowed a deduction for income taxes paid to the state. So if you imagine working up your tax return, and on Schedule A, itemized deductions, you deduct property taxes and state income taxes paid, this is on your federal return. Then you work it up again without that deduction, that can be a fairly significant difference, and that is where the AMT would come into play. There are also timing differences. Some of the AMT rules will slow down any depreciation deduction you may be taking, or accelerate up any income you're deferring with incentive stock options. That can be a real killer there. And just there's a whole bevy of these adjustments. So you really need to be careful here. What you might try to do in your tax planning, well, just as an example, you could, if you make quarterly estimated tax payments, you might at least consider deferring your fourth quarter state estimated tax payment. Instead of paying it in December to get the deduction, maybe pay it in January, because if your income is high this year and low next year, at least next year you might actually get that deduction, whereas in a high income year you're probably not going to get a deduction for your state income taxes paid, because the AMT will come in and remove that deduction. So big subject, lots to play with. Is it going to go away anytime soon? I doubt it. It's a big revenue raiser, and they're really not sure how to fix that. But that's basically what it is. Give us a call if you think you might be in an AMT situation. We'll take a look and see if there's anything you can do to avoid it. It is a fairly robust set of rules. It can be difficult to get around. Well written, I guess you could say. But feel free to give us a call and see what we can do for you. 503-208-3736. Thanks.